Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Hey Kelvin, thanks for dialing in.
Hi, Brian.
Now Kelvin, before we speak to you, let's take a look at how markets are performing across the region. And if you look at now the market performance, it is completely a sea of red. Now we're going to start with the Nikkei. It is down 1.72%, trading at 28,143.83. The Shanghai Composite is down 1.48% at 3,520.28. The Hang Seng is down 1.97% at 28,721.27. The ASX 200 is down 2.14% at 6,634.8. The Kospi is down 2.24% at 3,052.56. And moving closer to home, we've got Bursa Malaysia, which bucks the trend and is up 0.34% at 1,580.62. And rounding off, we've got the SGX, which follows the region. It's down 1.12% at 2,925.57. Now, Kelvin, what's your take on what's happening with the markets right now?
Okay, because let me start with the US market first, because it's the one that kicked off this kind of negative feedback loop into our Asian stock market. So very interesting, what we see overnight in the US market is that there is this two worlds of performance that is appearing. But the one world of performance is, yes, we start to see weakness or sea of red across the major benchmark stock indices. We're talking about the S&P 500, the Nasdaq 100, the Dow Jones, even the small cap, the Russell 2000, down by close to 2% or slightly more, which kind of registered their biggest daily drop since October 2020. And on the other hand, we start to see various small penny stocks in the US that is up tremendously by 100% to 300%. So one of them,
GameStop and AMC, for example.
Yes, precisely. So we're talking about GameStop yesterday went up by 130%. Then we talk about AMC up by 300% without any change in their fundamental business. All right, so fundamental is still.
What's the real reason for that? Is that the short squeeze among hedge fund managers?
Yes. So definitely right now is that in the last week or so, we start to see this particular notorious, I would say, group of traders that is in this forum called Reddit. They have a sub forum they call Wall Street Bets. So this group of foreigners kind of consists of mostly millennials traders. They're trying to actually target this particular stock. We're talking about GameStop as well as AMC that has very high amount of short interest ratio against their market capitalization. We're talking about short interest ratio about above 100%. Because these are very small, thinly traded stocks that can be easily pushed. So these traders are actually waging a war on short sellers, institutional hedge funds that shorting big on this stock in the last 6 months, that causes this short squeeze and gamma squeeze that saw this tremendous rally in these two stocks. All right. So what's interesting over here is that this rally itself actually kind of created a negative feedback loop into the broader market. Okay, so right now there is kind of unverified, I would say, chatter battle that is being floating around in the social media, the US social media like Twitter, all this, saying that because these hedge fund managers that are now suffering mega losses on short selling this GameStop as well as AMC, they got to take off some of their winnings in their previous winners, which is big caps name.
Yes, big tech. Yeah.
Yes. So that's why you see big tech actually suffered last night as well, despite Microsoft posting stellar results. Yeah.
Microsoft and then Apple stellar results, Facebook as well, stellar results. The only thing that disappointed, I think, was Tesla, and that was the reason for its decline.
Yeah, because even Tesla result came out in the after hours. So in fact, the selling took place prior to the release of these results. Yeah. So it's a very interesting phenomenon. So what I'm actually looking at right now is definitely some levels, because we're talking about key support levels or the SPX 500, because yesterday's sell-off led to a very key level, led to the price action, led to fall down to a very key medium-term support level, which is at 37.40. The Nasdaq 100 is at 13,020. So if tonight we start to see a bit of stabilization at this level, potentially it could create a bit of positive feedback loop into the markets, the stock markets, the US stock market, which could be beneficial to the ASEAN market. So maybe let's talk about the ASEAN markets. Well, if you look at the ASEAN markets, right, in the past, we start to see this 2% sell-off. High chance the ASEAN market will actually fall further. But in fact, the ASEAN market kind of actually outperformed because the magnitude of the decline is actually much lesser compared to the US benchmark indices, which is, I would say that it's considered as a kind of a positive sign for us, yeah.
Okay, Kelvin, now the big event yesterday overnight was basically the FOMC meeting. What are your key takeaways from Jay Powell's statements?
Yeah, because if I were to look at the latest FOMC statement and as well as Fed Powell press conference, in fact, nothing has changed, all right? So what Fed Powell kind of reassured to the market that, hey, the Fed is going to still maintain its ongoing pace of 120 billion monthly bond purchase program. Based on current economic situation right now, they are actually not going to temper at least for the next 3 to 6 months or so. So in fact, that is actually a what you call assurance or a sign that the Fed is still providing liquidity to the market. So by right, it should be a positive kind of trigger or a positive catalyst for the stock market. But in fact, because right now the stock market is right now kind of more focused on that short squeeze on GameStop and as well as AMC, that actually kind of override the positive tone on Powell's speech here.
Okay, then Kelvin, moving away from equities, how about the impact of Chairman Powell's statement on the US dollar?
Okay, if you look at the US dollar, in fact, right now is, because they are trying to provide ample liquidity in the system. So if you look at it, the yield itself, the US Treasury yield actually kind of sideways, still above 1%. Okay, so if you look at it in a kind of a longer term perspective, it should actually weaken the dollar. But however, right now, this ongoing kind of a medium term, short to medium term dollar rebound, if I look at the dollar index, it has been slowly inching higher since its low of 89.20 printed on 6th January this year. So it has a kind of a slow kind of what we call it, rebound that's taking shape on this dollar. So this dollar strength, right, is also kind of being reinforced by yesterday's sell-off in the US stock market. So what I foresee right now, right, if I look at silver dollar pair, it could still continue to see this ongoing kind of a medium-term dollar rebound within a longer-term downtrend. So I'm looking at the euro versus the dollar, looking for further potential downsides towards 1.2010. Then going below will be at 119.45/118.50. Then closer to our region, we talk about the Australian dollar, means the Aussie versus the US dollar. I'm looking at further potential downside to test the next support at 0.7520, and below it you should see 73.90/70. Then with the dollar yen inching up potentially higher towards 105.30/105.60.
Okay, so you don't see the dollar, for example, the Aussie dollar, for example, going up to the 80-cent mark in the near future?
Not now yet, not now. Okay. But in the long term, yes, potentially. But we're talking about the next 1 to 3 weeks. We still potentially see this kind of residual dollar rebound going forward. So what we are seeing now is a kind of a corrective dollar strength within a major dollar downtrend that is still intact.
Thank you very much for your insights, Kelvin. We've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.